All right, hey everyone. I've been talking a lot about outside reversal days over the years as important uh, junctures in the market from a tactical perspective. They can also have long-term implications, but really you have to kind of start off with a tactical perspective first. And we're seeing one here in NVIDIA. So I'll show you this chart here in the near term setup here in just a second, but I just would like to point out that if I go back to just March of last year, March of 2024, so what is that, 10 months or so, you can see that we've had multiple outside bearish reversal days for shares of NVIDIA. None of these have led to a collapse of a stock, and that's not the call here, of course. But just notice, by the way, that the stock is now back at levels, at least as of today when I'm recording this, where it was in June of last year. So it hasn't really done anything as much as, the long-term bullish trajectory remains intact. But just quickly pointing out before I look at the setup here right now, these outside reversal days, they matter, right? So if you take, for example, the very first one last year in 24, what happened is, again, people got excited. The stock opened up higher on the day and gave up all those gains, closed lower, then managed to kind of hold off, and then the same thing happened again a few weeks later, and then the stock ended up correcting as much as 20%. That happened several times last year, and each time these outside reversal days happen, the stock has tended to do that. Now, we've had one of those outside reversal days take place in shares of NVIDIA just the other day, early this week. And this came in the back of the CEO speaking at CES in Vegas. And, the stock basically rallied up 1.5% on the day and then reversed for a full intraday move of about, I think, 8% or so on the day. So basically what it's telling us, and this is in very simple form, it's just telling us that there's overhead supply in the stock. So I don't have to be necessarily making a huge bearish call in the stock here, but I know that there's a lot of overhead supply there. So, aggressive traders might go short here for a trade. Maybe somewhat more conservative would be to do a covered call if I was long. Maybe do an options bear call credit spread, something that I would like to do in a situation like that, where we can still make money whether the stock goes downside or even against us a little bit. But more importantly than anything, from a risk management perspective, we know that if the stock goes back above 153, which is where that selling came in, it's basically over in terms of the consolidation phase, and the stock would then go higher again. But just note that these bearish outside reversal days, they are important. They do tell us something. So hope that is helpful for now. Have a good trading day, and we'll see you guys soon.